The Land and Agricultural Development Bank has joined a long list of state-owned entities that are on the verge of defaulting on their debt should the government not open its fiscus to inject more capital oxygen. The challenges facing the bank can be attributed to a variety of strategic as well as operational deficiencies that have ultimately left it with a very weak balance sheet, unbalanced loan book and junk investment status. The cash-strapped bank now requires a 3 billion rand funding to stay afloat. We're now joined by Dr. Sifiso Ntombela, Chief Economist at the National Agricultural Marketing Council, to discuss how to save the bank, if at all. A very good evening to you, Doctor, and thank you for your time this evening. From your perspective, is throwing money at the land bank a solution to solving its problems, or do you believe there are some deeper structural reasons as to why the land bank finds itself in the situation that it's in?
Good evening to you, Thami, and good evening to your viewers at home. I certainly do think that there are much deeper structural issues over and above just solving the operational deficiencies, as you rightfully said in your opening statement. But perhaps maybe before I even get into those, I would like to emphasize the point that the land bank is one of probably those strategic SOCs that are so critical into our society and the saving livelihoods, as it deals with the main essential sector of servicing your farmers so that you can have food on table for everyone that you have. So it's not only just the SOC that deals with the economic issues of the country, but it's one of those SOCs that is so critical. It's a backbone of ensuring that you keep your social system of the country afloat. Now, having said that, the first thing that we could think of at the land bank, obviously, is that there are some operational deficiencies with the increasing number or share of the bad loan book that are not performing, which has somehow constrained your capital adequacy in the bank, and it also constrained the viability of the bank itself. But in our analysis, basically it goes to say, even if we were to save those operational deficiencies in the bank and get the best bankers and the best governance in place, you still have to trace back of the factors that have led to what it is in the land bank. And it can easily be traced maybe in the interest of time or for also the viewers at home, that it all started falling apart, especially when there was the closure of the Agricultural Credit Board, which was the institution or instrument that would be servicing those farmers that will not be able to be serviced by your commercial bank and other part of the financial system. Now, with the failure of that, there has been an increase then of this loan book that has, and a very strong shift of the land bank towards your risky and your short term, which has basically affected its liquidity to what it is today. But more so, it's an inability of the bank to continue servicing, especially your emerging farmers. And how can it be linked with the land reform and the newly settled farmers themselves? So basically the banking capability of the land bank itself. And that's what of the things that we have to be talking about to say, in a broader scheme of things, where does the land bank fit in on the developmental agenda of the state? And I think that discussion has somehow been silent to those that are working on finding the solution for the bank.
And why is this the case? I mean, you talk about the closure of the ACB, but that was way back in 1998, where the mandate of the ACB was then transferred to the land bank. And we do know as well that there have been several advisory committees that have been put in place to inform the agricultural transition in our country. I mean, we just had in May of 2019 the Presidential Advisory Panel on Land Reform, Agriculture, recommending to Cabinet how the land bank can be transformed and how the gap that was left by the ACB can be filled. Why is it, you believe, that this has not been done, specifically considering the fact that agriculture and agrarian reform and facilitating loans and capacitating our farmers is so integral to the transformation process of the country?
I think we need to be very cognizant as well that agriculture is one of those sectors that are very constrained by a severity of factors. Some of them, like climate and natural disasters, which are actually outside control of the farming commission themselves. But having said that, this is the reason why across the globe, even if you're looking into the EU, almost 40% of the EU budget goes into agricultural protection, and some of those programs are essentially to be assisting the farmers from the ground level. Now, the importance of the Agricultural Credit Board and why was it so critical in the development of that is the fact that even the commercial farmers that we have today, which are very viable, performing very well, are actually the product and the result of that institution that was there. So they were able to provide them with the easily accessible and affordable capital. But it was also able to even provide additional services like the life insurances and other systems to ensure that the farmer is able to be assisted up until he stands ready and he can be able to participate fully into your open market system. Now, with that being closed at a time when the country was in the transition place where now you were allowing the new crop or the new cohort of the farmers, which were excluded for the last 100 years in the South African context. It is not then different that you're finding the bank even struggling to continue servicing them because the majority of them are unable to be assisted by any commercial bank or even the land bank for its matter in its current form. So these are some of the structural issues that continues to basically hinder the land bank. Hence, we call it to say it has to be a broader issue than just dealing with our operation and continuing to provide the capital that we need in the short term without necessarily dealing with broader. It talks to how do you even service all the land that has been acquired by the state has been transferred to this format. And how do you even deal with the production cost and the production financing so that they're able to produce the food that we have? And those are the things for us which says, how do you go back into some of the instruments that used to provide us services in the sector which were closed? And now you're expecting a certain institution to continue doing so, but without necessarily the resources that used to be provided in place in the center. So it becomes a very tricky situation where you're expecting positive results, but these instruments are not in place to do so. And they used to be, but they were closed down.